What's going on, everybody? How we doing? How we doing? Give me a one in the chat if you can hear me okay. Give me a one in the chat. Is it loud enough? If not, let me know. I'm gonna assume everything's good. I haven't changed anything since last stream, so. First stream in the new apartment. First stream in the new apartment. So the audio. I'm in my bedroom right now, actually, which is where my office is, and there is no, literally just blank walls right now, so the acoustics might be a little off, but other than that, I think everything should be good. So today on this stream, I kind of had a little list of what I wanted to talk about here, but like I said, we're going to cover some search and destroy. We're going to cover the trade I took, and then we're also going to do some Q&A at the end, so everyone can ask questions. But let's make a little list here. So we're going to do seek and destroy, search and destroy, whatever you want to call it. And then we're going to do the trade recap. And then we're going to do a Q&A. This is the itinerary for tonight. So I don't want to make this go for 2 hours like the last stream I did. I always say that every single time and it always runs over. But we're going to try and get through all everyone's questions. Just try and save them for the end. Because I literally, you guys know this if you've been to many of my streams before. If you're an OG, I always have the chat pretty much out of view while I'm doing the recap, these first two things. And then towards the end, I'll open the chat back up and I'll do questions. But what we're going to end up doing is saving the questions for the end like usual. So, but yeah, this is itinerary. So let's get to it. So you guys know I've been posting a lot of seek and destroy lately. And that's not like on purpose, right? It's mainly because we've been stuck in this range, you know, and we're kind of busting out a little bit right here. So we've been so choppy since basically beginning of April all the way up to now, and we've just been stuck in this consolidation here. So it's been a lot of seek and destroy, all these dojis, things like that. It's not what you want to see, at least when I'm trading. So the market's been really tough. It's been tough to get a read. Haven't really had, you know, a lot of runs, sustained runs. Like right here is a good day. You know, maybe this move right here was a good, but everything in here, I mean, this is like a week's worth of price action. So it's been kind of better these past couple days, but as you can see, we've basically been stuck in here. So that's why I've been posting so much S&D, seek and destroy, search and destroy on Twitter. It's because let me mute this, hold on. Alright, distracted me. That's why I've been posting so much seek and destroy on Twitter, is because we've literally been stuck in this chop. And so it's been pretty common. And so it might seem like that's all I focus on, but in reality, that's all that's really been happening. If you think about it, might have a couple good days, but the majority of them have not been. So actually, I forgot to do one thing. Let me, hold on, I do have to mute one thing. Let me do one thing real quick. I just gotta minimize this. And I will be right back, sorry. I have a cursor highlighter I'm gonna cut on for you guys, so it's easier to follow along. There you go. All right, you should be able to see my cursor a little bit easier now. But anyways, that's kind of why I've been posting so much seek and destroy, because we've been in this range and it's really nothing else going on. So we basically either take out a previous day's high or low and then return back in the range. And so, I mean, even on a longer term, you know, we take out the low, return back in the range, come back for the high, return back into the range, take out the low, back into the range, and now we're taking out the high again, right? So who knows, maybe we go back in the range, maybe we want to come up here and take out this high up here. No one really knows unless you're from the future. So just keep that in mind as we go into the rest of the week. We could probably hit this, you know, tomorrow, or We could come back in the range and hit it a month from now. Who knows? But that's basically what's been going on, and why I haven't really been. You don't really get a lot of sustained moves, and so basically you have to trade like it's a scalper's market, right? It's not like this where at least we have a draw, right? These highs, at least we have a draw on these days. We've literally been in a scalper's market for the past like month or two, so that's basically why S&D has been popping off on my feed lately. So, and the reason for that, before we get into today's price action, the reason for that, and if you're wondering, time frames up here. If you guys couldn't tell, I have it switched up. So the reasoning for my focus on seek and destroy, search and destroy, is because in the beginning, I would always hurt myself trading seek and destroy conditions. So I would always hurt myself trading those conditions, and this is like in the beginning of my journey when I started ICT. It was hard for me knowing when to stay out, and so I had to develop a methodology or like a system that to go through, like a checklist in the mornings to keep myself from trading those conditions, or at least give myself a warning before the market opened. And so it's just basically a little like checklist or system I go through in the mornings, just going through these charts right here, and having this indicator on. It definitely helps with the visualization. But that's the whole reason for my focus on it, because if you think about it, I mean, anyone can trade every day, right? But it's the pros who are able to keep themselves from pushing the button on days like this, right? If you're sitting here watching this, or you're trying to trade this right here on the 15-minute, like there's literally nothing here, unless you're trading like turtle soups, because you know it's going to be seek and destroy. But we can talk about that later. But anyways, that's the whole reasoning behind why I've focused on it so much recently, right? We've been stuck in it for months now. And so I feel like I've gotten pretty good at spotting it, or at least spotting the warning signs. But that's basically the reasoning. I'd always hurt myself. And so I had to develop a system to restrict my trading. And the last thing I'll say on that is, you might see people posting on social media that they're taking these trades during these conditions, right? And that's fine if that's their strategy, but I'm just going to give my 2 cents on it. And I'm not like this isn't aimed at anyone, right? It's just my 2 cents. The people that you're looking at, right? Those people who are posting trades in these conditions, and I'm kind of a hypocrite, right? I posted a trade today, and I'll be honest, like I probably shouldn't have pushed the button, and I went on the 1 minute, which is something I never really do anymore, but I kind of just saw a setup that I liked on the 1 minute, and I ended up taking it. So it was more of a, but you got to remember, when did I take that setup, right? It was right in this hour right here on this swing when it came back up and hit these highs just from here to here. And so I kind of had, it was obvious it was going to be seek and destroy, right? Because we took the high, came out, took the low, and we were basically right here when I entered the trade. So I kind of knew that at least this low is going to be protected, and we go a little bit higher. So, because we'd already returned back in the range. Take these off. But back to what I was saying. You go on social media and you see people trading or pushing the button in this price action, and maybe it's because they don't know how to identify the conditions like I do, or at least as well as I do. And don't worry, I'll go over all the indicators and stuff in the end for the questions. But you might see people posting trades in these conditions, whether it's in the right at 9:30 open, before we kind of know for sure if it's going to be seek and destroy, or it could be over here when we already know. Maybe they aren't familiar with spotting it, or maybe they are familiar and they're pros at it, but they still push the button anyways. All that shows me is that those people are not disciplined enough to remain out of the market, even when they know the conditions are bad. And I was a victim of this today too. Even though it worked out in my favor, it doesn't matter, because in the long run, when you're trying to trade in this chop, in these conditions, in the long run, it doesn't matter if I win today or tomorrow. In the long run, over my whole trading career, trading in this is going to hurt me in the end, right? I'm more likely to lose money trading this in the long run than I am in higher probability conditions. And so that just goes back to something I tweeted earlier today, is keep putting yourself in high probability environments or high probability scenarios, trades, whatever, however you want to word it, keep putting yourself in those environments and watch how your trading transforms. Because when you only participate in the high probability environments, when you only take your A+ setup or your signature and price you're looking for, and you only take it in those high probability environments, you're going to see your win rate go through the roof. Okay. And so when it goes through the roof, you're going to be like, wait, what am I doing differently? You're going to notice it's because you stopped forcing stuff in this. You knew what to look for in the morning, and you didn't have to stress yourself out watching price all day. I guarantee you people were in here trying to trade this on the 1 minute, trying to trade it on the 5 minute, whatever. It doesn't matter the time frame. They're trying to trade it. And I bet a lot of people lost money. I bet a lot of people were really frustrated, and they're probably going to carry that over into the next day if they're not experienced enough to just let it go and treat tomorrow as a new day. And so here we are opening up the Asian range for today or tomorrow, sorry. But that's just my 2 cents. It goes back to the saying, you become, here you go. I'm just going to copy and paste this. How about that? You become who you surround yourself with in real life and online. We've all heard the saying, you become the average of the 5 people you hang around the most. Same goes with the content you consume, right? If all you're watching is Netflix, or if all you're watching is, shitty content, bad influences on TV, whatever content you consume, that's probably going to affect your mindset or how you think, whatever, and it's going to have an effect in your trading. So same goes with the online part, especially. If all you're following are traders who are forcing trades in this, and they're going on and bragging about how they made money today, you're probably going to end up forcing trades as well. Whether you like it or not, or whether you think you are or not, subconsciously, you're going to see people posting online that they got some wins, and it's going to give you some FOMO. So that's why I try not to post any, that's why I'll even post my P&L. Like, I made $0 today. Not today, sorry, but like in the past, I will post, hey, I made $0 today, and it'd say unrealized profit, realized profit, 0, both 0, just to show you I hadn't taken a trade today. And that's to show you guys, just being real. I don't want to give the false representation that, I could probably go in here on the 1 minute and trade and scalp, but I don't want to do that, because it's, like I said, that's the whole reason I switched to the 5 minute. It's the whole reason I switched to the 5 minute. It's just a lot less stressful, especially in these conditions where you're like, okay, well, I know it's seek and destroy. Well, the 1 minute's going to give me some fair value gaps, and the 1 minute's going to give me some nice, swings at least, right? I just don't want to do that anymore. I've done it for over a year now, and trading in the 5 minute gives me that peace of mind knowing, hey, right, this is how my charts are laid out, 15, 5, and 1 hour. It gives me that peace of mind where I don't have to look for anything on the 1 minute to be able to make money that day, right? And if there's nothing on the 5 minute that I like that's high probability, then I probably shouldn't be trading, right? I probably shouldn't be trading if I can't find a setup on the 5 minute, because that means to find a setup, I have to go on the 1 minute. And if I can't find a setup, if there's not enough range up and down or volatility up and down on the 5 minute to make money, that means I'm probably going to be in a high resistance liquidity run on the 1 minute. Even though there's fair value gaps in the 1 minute, it's probably not going to move as clean as you want. So you're, in the end, you still are technically forcing a trade by just narrowing and getting FOMO on a smaller time frame. So that's the whole reason I've switched. My win rate's gone up. I take less trades because of it, and it's just a lot easier mentally to not have to sit here and, like, when I saw the signs this morning, I just said, okay, red flag. If we do what I think we're going to do, like we've been doing for the past 2 months, the majority of the time, then I'm just going to take it easy and go to the gym, go to the grocery store, get some chores done, whatever you want to do in your day. So that's my 2 cents. I just wanted to say all that before we go into the price action, because I do see a lot of people posting, trades, and like I said, I posted a trade today too, so I'm guilty of it today as well. But you will get that FOMO if you start following a bunch of people who neglect the conditions, right? They don't respect the market, because it will humble you. So let's get into it. Let's see here. I'm just gonna look at the chat real quick, and then we can go into it. The indicator is this by Infinity Trading. I'll put a link into it. How about that? I'll put the link in chat for the boxes indicator, and I'll show my I'll show my settings real quick so you can copy it. That's the link. Shout out Infinity Trades for the indicator. When looking at the ranges in the morning at the start of the New York session, what do you look for to tell you? Yeah, I'm gonna go over that, Steven. Yeah, I use Q for Confluence on SMT. I look at all three. I'll show you my SMT window in a second once people have copied these settings. You can just screenshot it. You can pause the video, go back. This will be recorded on my channel. Does anything of what I do apply to Forex trading? Yeah. The sessions are going to be a little different, right? The kill zones. So just go to ICT's videos to look up those. I've never actually traded Forex before, but the actual like concepts like fair value gaps, order blocks, and things like that, like the candlestick stuff, is all the same. The time, it's just the times of the day, the time element of the time and price. The time element is different for Forex and varies in some aspects. Do I always use the 5 minute? Yes, I always use the 5 minute. Like this is literally what I stare at all day. 1 hour, 15 minute, 5 minute. How do you place the name and time frames in the top right? It's this indicator right here. By 2 degrees. I'll share that one as well. There you go. Shout out 2 degrees. He's got some cool indicators on there. Like here's actually a cool one. Before we get into it, yeah, this one's sick. It shows the daily candle for today. The whole range, right? It shows the New York opening price. I think I have it set to that. Yeah. You can even set it to, instead of using a daily candle, I could set it to like an hourly candle. So now it shows the hourly candle for this hour that we're in. So you can do power 3 on the 1 hour. Pretty cool. But like I said, I use it for the daily because I'm trying to catch the daily range. And when we're in search and or seek and destroy, you kind of see how the market, which is actually hilarious where we closed today. Let me take this off. We closed at 1600 right here. So if you look at where we closed, and you look at where's midnight open, which I'll mark out since we're going to need that anyways for the review. Look how close we are to midnight open right here. This black line is where the price closed at regular trading hours. And look at midnight open. So the daily candle is literally a doji if you think about it, which is funny. So that's seek and destroy for you. Even though it says right here, like for some reason, the trading view likes to use this as the opening price for whatever, but we all know algorithm refers to midnight open. So in our mind, this is basically a doji, and price just closed right where it opened, just kind of chopped around. So let's keep that on. Making sure I didn't miss anything. Yeah, hourly chart for. Yeah, if I can't define a draw on liquidity on the hourly, then I kind of just like move on to something else, or I'll just wait for the market makers to show their hand. Like right here, obvious, just this doji came back in. The bodies are telling the story, right? The damage is done on the wicks when you look at the hourly. The damage is done right here from people chasing price on this, thinking it's breaking out, comes back in the range, and keeps chopping. Think about all the people who tried to short or go long right here, buying options. Boom. Immediately in a loss. They thought it was breaking out, and that's huge strength, that candle right there at open. And the people who are like, oh my God, big sell-off coming today. Look, we just broke out of this resistance or this support right here. We're breaking down. Weakness. We're going to short. We just broke out. We closed 5 minute close below the level, immediately returned back into the range, and they're now stopped out. So all those people are just getting dragged across the coals all day. And then you see what it starts doing, right? It starts chopping, starts consolidating, and it might break out above these highs and then return back in the range, right? Just a classic seek and destroy. It'll break out above these highs, return back in the range, and just chop some more. And that's the end of the day. So everyone who got dragged right here was probably thinking, okay, I'm going to try and make it back in here. And they just got destroyed. All right. So let's get into it. Signs of seek and destroy. First thing I do when I sit down, actually, I don't even look at this. I go straight to my daily high and low chart. Daily high and low chart. And I mark it out with these vertical lines. I'd go over this every live stream, but we're going to keep doing it because it's just my routine. Let's go ahead and mark out today's high and low. Could change, man. This could bust up here later, but I'll just adjust it in the morning if it does. But this is basically what I saw at 8 o'clock when I sat down. I forget these are here. We saw price open up down here with the gap, and previous day's low has been taken out. And if you go on a higher time frame, right? I thought this could maybe be a draw because there's two equal highs up here. These are pretty equal in height. So I was thinking maybe if we come down here and sweep this low, price might want to come and then also hit off this gap right here. If you draw it out, there's the gap. So we hit off this gap, take out this low. It's almost like a turtle soup entry, or could form a breaker if we come up above this high, like this, back above. So this could be like a breaker. Obviously, you go on a smaller time frame and see, but like I said, we barely displaced over that high, just kind of swept it and then went lower. So if we had displaced higher, came back down, and could have been a buyer there and looking to target this high. That was just kind of something I was looking at as once I kind of sat down at the chart at 8 o'clock right here. So maybe you wanted to come back up and sweep this low right here, and you could have seen something like off this candle, like a mini breaker. But anyways, so this is the first thing I do: open up my daily high and low chart, see where we're at in terms of yesterday and kind of like what we've been doing. Expansion, consolidation, retracement, consolidation. Who knows? Let's get off this. So I look at this, I just peep at this, and I kind of make sure nothing had moved since I closed the chart at the end of the day. And then once I kind of realize where we're at, I'll come over here and jump on the daily. Or actually, weekly is what I always start with, just to see what's going on. And you can see we just keep reaching into this fair value gap for these weeks. And now it kind of looks like it wants to expand above these highs right here, which on the daily is this high over here that I marked earlier with you guys. So touch into the weekly fair value gap twice, as we've been kind of just taking liquidity and returning it back into the range. And I had marked out, I noticed that we had opened down here in this daily fair value gap, so I marked this out. Let's do, and I just do FEG daily, and I'll mark another one, FEG fill daily. So once that's marked out, that's pretty much all I see, and obviously previous day's highs in my head. 4 hour. Oh wait, I gotta put this levels on. All time frames. There we go. You can kind of adjust them to make them look clean. So here's that daily fair value gap we opened in. Price comes up, and then you can see we actually hit it almost to the tick right there later. So 4 hour, same thing. There's a little imbalance here, but prices, it looks like this when I open the chart up. Ish. So we'll go down on the 1 hour. Same thing. Nothing really that's really changed except for like we're hitting this order block right here. Series of down close candles that also matches up with the daily fair value gap right here. So you can see how price literally hits it, retraces, hits it again, bounces a bit. So it's a nice confluence right there. But anyways, obviously I'm teaching in hindsight because we can see these candles now. But this is exactly what I did this morning: is mark out these PD arrays. And let's go to the 15-minute now. So I basically go weekly, daily, 4 hour, 1 hour, and that's why I have these favorited up here. That's literally the order I go in. So now they're on the 15-minute, which is what I like to use the most. It was clear that we were just consolidating here this morning. And the chart, like I said, it looked like this morning. So just consolidation, no real displacement. And I had these highs marked out. Clean highs, 1, 2, 3. Nice clean highs there. And we can end up filling the rest of that fair value gap in from here to here. So, and there's also a little volume imbalance, it looks like right there. You can see it on the 15-minute. So let's go to the 5-minute and zoom out. Just exit this now. So how do you know, actually, I did that wrong. Let's go back to 8. So how do you know it's going to be a seek and destroy day? Well, we had no news today. So if you pull up the economic calendar, let me get a screenshot for those of you who aren't. Let's see. Okay, can I not paste this? There we go. How do you know it's going to be seek and destroy? Well, you look at the calendar, and what do we have? No news today on Monday. A lot of red folder stuff later on in the week. So it's a Monday. There's no news on a Monday. A lot of red folder stuff ahead in the week. So those are all little things that I'm taking into consideration before I even sit on the chart. I don't even the first thing I do is open up the news before I even open the chart. Sorry, I can't talk right now. The first thing I do is open up the news before I even open up the chart, and I want to see what do we have this week? Is it non-farm payroll week? Do we have CPI? Is there any FOMC stuff like there is on Wednesday right here? All those are important factors. So I take into account what's today and what's coming up in the rest of the week. No news today. Red flag in my mind. Okay. Might not be a lot of tradable long sustained runs because there's no news. So there's one red flag. Then I pull up these boxes right here on the 15-minute time frame. And I see this. What is this? We have Asia. And we have London kill zone or session, whatever you want to call it. They're different, but we have Asia and London. What has London done? Who can tell me what London's done in the chat? If you've been following me on Twitter, you know exactly what it did. Post in the chat. What has London done to Asia? Yeah, took the high and the lows, right? And also, it also matters though when did it do it? It took it before 9:30 equities open. So when London takes Asia high and low, that should be another red flag or a sign that, hey, I should be cautious. Because you kind of have this range expansion right here. And so when the range is just constantly expanding like this, look what's happening. This is not a trading, this is not used for trading purposes. This is just to illustrate these lines, these trend lines are used to illustrate how liquidity is being swept high and then comes down and sweeps a low. Sweeps a low, comes back and sweeps this high. And then see how the range is expanding on either side? That's why I draw these, to show you that price is literally just chopping up and down, trying to catch people who are either breakout traders. And so if you're a turtle soup trader, like buying these lows or directly down here, then this might be, you might love these types of days because you're just going to buy down here and target the opposing liquidity up here and then just reverse your position here and go lower. So that's not how I trade though. So that's a warning sign for me not to get in, or at least not to get in, sorry. That's a warning sign for me to be cautious around 9:30 opening or when New York is about to get its volatility. And I'm saying, hey, maybe I shouldn't take a trade until later on in the session, like maybe after like 10 o'clock when the opening range has been set, or 10:30. So Asia's been swept by London. Asia's high and Asia's low has been swept right here and here. So this is what I see. I also know that there's no news. 1, no news. 2, Asia high swept. Okay, so these are the first two things I see. And also, just in general in my head, I know price action has been pretty shitty for the past 2 months, and we've had a lot of seek and destroy days. So I'm carrying that with me into today when I see this as well. And it just comes with experience, knowing what to look for, and also looking at the calendar, looking at the warning signs. Someone's asking if Asia isn't taken out, is that a high probability trading day? What I like to see is this. Like, I bet we can find a good example just scrolling back. Like, here you go. Asia low never got touched, right? Come up here, take out the previous day's high, return back down, sweep the Asia's low. And once we do that, you see London left Asia's low right here. So you have these relative equal lows right here that we hit. You also have this fair value gap right here. Consequent encroachment of this fair value gap, almost to the tick right here. That's what this line is. I'll make it red. Boom. Hits it. You could be entering right there, or you could go on a smaller time frame, like a 5 minute. And if you know what you're looking for, just power 3 wise, you don't even need a market structure shift. You can either get in right here on the turtle soup, down here on if you want to really refine your edge or your entry, the consequent encroachment of that 15-minute fair value gap, or you can wait for price to show a reaction there. So maybe you see this candle here, then you see a nice, a move up, creating a fair value gap. Then you can get on this fair value gap without a market structure shift because you know what you're looking for, right? Or you could wait for a shift right here. So once you have that market structure shift, now you can get in on the order block. And your stop could be below. Or if you really wanted, you could be below this low. Whatever your risk tolerance is. But you can see how it continues to respect that fair value gap. So that's like just one example of price leaving Asia alone on one side. So it generally, for me, I like to see something. Let's go like here's a really good day actually. What is this? What is this? This is nice. You have your accumulation in Asia, manipulation in London, distribution in New York, right? Power 3. Accumulation, manipulation, where it sweeps the highs, these equal highs right here. People think this is resistance, so they're going to buy. But really, we're looking to sell because we're above midnight open, which is right here. We extended it like basically right here. And then 8:30 open is about right here, which is kind of equal to midnight open. But if you know, it almost looks like we're on this curve, with this curve right here. And if you know me, or anyone who trades market maker sell models or buy models, you buy side of the curve and you start seeing the sell side of the curve. And then eventually, boom, you have this nice run and distribution down below these lows down here in New York. So those are the days I like, when you have a clear, nice clean manipulation move in London and an accumulation in Asia, and then New York, you're going to see the distribution down like that. So I hope that helps visualize. That's why I like these boxes so much, because it helps you see this, right? It helps you see this power 3 concept. So this would be Asia, London, New York. Welcome, Rob. So I deleted my warning signs, but anyways, no news. Asia's taken high and low by London. And so once I started seeing, let's just start seeing the chop. Where is 9:30? Is it 9:30? No, I got no, that's not 9:30. 9:30 is like right 930 is right here. So once I saw this and we started coming back into the range after taking out these highs, I was like, okay, it's looking like seek and destroy. There's no displacement down right here. Just like there's not really been any displacement down in these on this move. So it's just chopping around. So I didn't really see anything I liked. But you see right here to the tick, we hit midnight open. Let me go ahead and mark out 8:30 open as well. 8:30 open is right here. So here we go. 9:30 open. Big old green candle. And what is that doing? It's enticing everyone who's looking at this. They're thinking, oh my God, look at this breakout. We've been in this, range, and look at this huge green candle. This is a huge 5 minute. This isn't 1 minute. This is a 5 minute, 10 and a half handle candle. It's a mouthful. This is a 10 handle candle, right? So everyone who's seeing this is like, oh my God, we're breaking out. And then you can see what happens next. Another green candle, right? And then you start to see their dreams get crushed. Boom, they get dragged. And so this is about the time where I started looking for a trade, because we had swept the high and we had swept the low. And right when we came down here and hit this daily fair value gap, which also happens to be, there's a new week opening gap for this week. Sorry, this was not the daily opening, new day opening gap. This is the new week opening gap that I mentioned. You can see how it's prospecting it right here. It's the consequent encroachment. And if you split it up into another 1/3, you get, 125%, like ICT does, you get almost at the tick right there, 4 quadrants. So if you're a new week opening gap trader, maybe you saw that and you bought down there, congrats. But I just have them on my chart. I don't look at them 24/7. I just refer back to it when I have time. But you see where that also lines up with the daily fair value gap down here. So you have this range expansion, seek and destroy, and it just chops everybody around. But anyways, that's how I spotted the warning signs. And you can see, like, when, let's take these boxes off real quick. Like, how do I know it's not going to continue higher? Well, if you wanted to see this is basically a liquidity void in my head, because of how long and extended this 1 5-minute candle is versus this little fair value gap right here that's respected. Oh shoot. Versus this little fair value gap that gets respected right here off this candle and goes higher. This is like a liquidity void in my mind. So I want to see this. I want to see price. If it's gonna go higher, it's probably gonna come down to 8:30 open. Respect these candles, these order blocks right here, or breaker block if you were considering this as a breaker. That would be correct too, in my head. But you obviously want to wait for it to come in at a discount, which this whole fair value gap is discount. So in my head, I thought I wanted to see price remain above the 8:30 open, which also happens to be the consequent encroachment of the fair value gap, and you see we close below consequent encroachment on this candle. So once we did that, I was like, all right, well, I think we're just gonna rebalance this, and probably in my head, remember, I'm thinking seek and destroy. So if we take out the high of this range and immediately turn back in after enticing everyone to go long here, we're probably just gonna come down here and take out these lows now that it look pretty clean. So these are all relatively equal lows in my head. 1, 2, 3. And that's what happens. Comes down, takes it out. And I think I was back getting some water on when we came down here and hit this. So I came back and boom, immediately saw this new 5-minute candle just come back and rebalance all this. And I was like, okay, we're in this seek and destroy. If I'm going to take anything, it's going to be a scalp, and it's probably going to have to be in a lower time frame. So that's why I went on the 1 minute. Let's see here. Do you draw every day those boxes, or it's an indicator? If you scroll up in the chat, I put a link to 2 indicators that I use daily. And the settings, you can just go rewind somewhere towards the beginning, and you can copy my settings. The times are altered a bit, so the boxes are like basically back to back and more congruent. The original settings don't have those, don't have that. But you can go back and look at my settings and copy them. And I actually got, I'm not going to take credit for those settings. I got them from T-Trades on one of his live streams. I've just been posting about it a lot, so I give credit where credit is due. And I got these projections from AM, right? So I've just basically been I've been taking little nuggets from people that I've been following, as well as ICT. And, you know, I'm not going to, I don't know where AM got the idea for these, and I'm not sure how T-Trades found that boxes indicator and how he customized his settings like that, but I just liked it so much that I copied some stuff. I take little nuggets from each little person and kind of make it my own. So shout out to those guys. Let me take one sip of water. So now that we've kind of gone over how I was able to spot Seek and Destroy, or how I basically do it every morning, and how I did it today, let's go over the trade recap. So let me just get off this replay mode. So like I said, when price came down to the daily fair value gap and immediately returned back in the range, and you can see what happens if you take the range for the whole day, which is from here to here, and you do just a 50% fib, that would be this red line. And you see price literally just chops around that red line all day in equilibrium. That's at fair value. This is equilibrium. So it's not going to want to go anywhere, right? Because it's happy at this price. It's in harmony. So this is fair value. This is equilibrium. And anyone who's trading this, if you're going to trade it, you have to be quick scalps, right? Until we get some kind of expansion out of this range. Because what are we in? We're in consolidation or range expansion. And it's funny, you think when someone says range expansion, you might be thinking, oh, like we're getting big moves, right? No, range expansion is literally, like I said, it's just we're taking liquidity on either side and just expanding the range. So from consolidation, what happens? You get expansion. So what is the market doing right now before all these news events, and for the rest of the week? What is it doing? Well, it's just consolidating, right? And when we get those news events, it's going to expand out of this consolidation. And so why is that important? Why is it important? Because this is price delivery, right? Let me make this a little smaller. This is price delivery in a nutshell. This is basic stuff. This is core content month 1, right? This is like video 3, video 2, something like that. Price delivery. Well, in consolidation, I don't like to trade. But I do like to trade when we get nice expansion moves like this, when price expands higher or expands lower, right? I do like to trade those moves, but I don't want to trade consolidation. So that's why we look for search and destroy to, early on in the morning, look for little red flags to tell us what is price going to do that day. And if we get little hints that, hey, today might be a shitty day, then I can be a little bit more cautious and, you're supposed to be selective with your setups, but I can be a little bit extra selective for that day. So we're going to expand, obviously, later on in the week when these news events occur, right? Like we have Tuesday, red folder on Wednesday, red folder on Thursday, and Friday. So price is just consolidating until those events. But anyways, back to what I was saying. When you have a change in the state of price delivery, like going from consolidation to expansion, that is when the opportunity arises to take a trade. So think about that. If we go on, like right here, okay, over here, you have, without even looking at the sessions, I just can look at the price, and tell you, you have consolidation. Let me bring this over here. And obviously it's hindsight now, but yes, I'm teaching through hindsight because it's going to be really easy to spot on this example. Price delivery, when price is consolidating, right? And then we get this nice Let's see. This is all consolidation. When price goes from consolidation and an expansion, right? You have this big move up with these fair value gaps. Obviously, you have this fair value gap right here. But what is occurring right here? We're going from consolidation to expansion. And whether maybe you think this is expansion, right? Or sorry, maybe you still think this is consolidation. I don't think it is. What you want to see is, you want to see displacement. Okay? And when you have displacement, I like to see FEGs left in the wake of that. Within that range, this displacement range. And so when you have that, and you can wait for price to come back down to a discount, OTE, dead center fair value gap right there in OTE. Boom. So you have the displacement and we wait for price to return. And this is on the 15-minute chart. We wait for price to return back to discount. So anywhere below here. Well, what fair value? Maybe you got in right here when we filled this fair value gap and you wanted to wait for it to come below the 50%. So you could be a buyer in this fair value gap within this red box below the 50%. But your stop would have to be either below the swing low, below the order block, or below the lowest fair value gap candles low. So this low right here. Mark it right here. If you want to be really aggressive, you could put it right here for a really tight risk reward, but you would have gotten stopped out. So it's always best to just put it below the last imbalance before external liquidity, which would be down here. Because this is internal liquidity. This is external liquidity. And if you see this displacement higher, it's always a good rule of thumb to follow the displacement, and you'll see the move will then continue. So you have this expansion after sweeping. This is a good power 3, actually. You have your, just call this consolidation, and then, because even though we took out this high right here with this move, return back in the range. Took out this high, no displacement, return back in the range. And what happens? We take this low, don't displace below it, return back in the range, and then you start seeing displacement higher above these highs. Nice market structure shift here with displacement. And then, so this would be like your manipulation right here. And this would be your distribution, right? So accumulation, manipulation, distribution, or in simple terms, accumulation, manipulation, distribution, right? So, boom. Or I guess you would make this on the purple one, wouldn't you? Anyways, you guys get the idea, right? I don't have to draw the boxes. But that's basically what occurs here. And that's why I love being a power 3 trader, because if I can frame the day like that, I basically have a good idea of what's going to happen. So you have your manipulation here. And then once we see this expansion higher, you have a retracement. So price goes from consolidation to expansion up here, then retraces down, and then you get an expansion move in the same direction that occurred before. So expansion, retracement, expansion. And so what's occurring from here, this consolidation into expansion, that's a change in the state of price delivery, and that's where opportunity lies. That's where our opportunity is as traders. We want to be catching a change in the state of delivery, whether it's going from consolidation to expansion, or whether it's an expansion to a reversal. But price can only, when price is in consolidation, it can't reverse. It can only expand out of consolidation. You can't reverse in a consolidation because it's not going anywhere sideways. So from consolidation, we always go to expansion. And if you look for the manipulative move before the expansion, right? These equal lows got down here, got taken. I think I took a short over here actually into these lows on the 5-minute. But if you look for the manipulative move and we take out sell side, then we're probably going to go and take out buy side. If we're taking out sell side first, it's going to want to. It's basically trying to trick. That's your Judas swing. It's basically trying to trick all the traders, who are viewing this as a breakdown, as weakness, is trying to put them in on the wrong side of the market and get them to go short. And it's also trying to trap traders who have been long and have trailed their stops here. And it's trying to stop them out from catching this continued move from here. Anyone who saw this right here probably viewed this as support, trailed their stop, and now they are left either stopped out here because they didn't catch them, because now they can't catch the rest of this move, or maybe they went long in here viewing this as support. Boom, they get stopped out, and then the move runs without them, and they're all pissed off. So that's basically what I wanted to get my point across, was opportunities are born from a change in the state of price delivery. So let's just write that down. Boom, right? So what are we doing here? We're consolidating on a higher time frame. Look at the 1 hour, not displacing at all. No, barely any fair value gaps, and if there are, they're really minute. Like right here. No real displacement. Like here and here and here. Just chopping around. The bodies tell the story, remember? The wicks do the damage. So look, the bodies are just staying in this range, this real tight range. Anyways, let's go to my trade. So I got in down here. So why did I like this level down here? What did I see? Well, I saw the new week opening gap right here. If you go on the 5 minute that I was watching, here's where price hit that new week opening gap. We also hit on the 15 minute consequent encroachment of that wick right here, 50%, which is this black line. So new week opening gap, consequent encroachment of this wick. And I was viewing this as a run on stops as well. We took out these equal lows, 1, 2, 3. Took out these equal lows and ended up hitting, consequent encroachment down here. And we, like I said earlier, this lower quarter of this new week opening gap almost at the tick down here, and return back in the range. So I was viewing this as a run, right? And so anyone who went short right here, it's not going to want to let them get back out of their currently underwater short position because price is up in here. So they're not going to want to, the algorithm's not going to want to let the traders who went short off this break down right here, they were viewing that as weakness. It's not going to want to let them get out of their unprofitable trade at break even. So it's going to they're going to protect this low right here. And so that's why I was looking at this right here, all these confluence points, 50% of, which is actually mean threshold of this order block right here, or this down close candle. And why is this a valid order block? Because price comes up, and look at the bodies respecting the midpoint of this new week opening gap as well. That's just awesome. Just a lot of confluence points here. This order block, why is this a valid order block? Because price has broken this high here and continues higher, right? And so now you see it come down, hits the mean threshold of that order block, which also happens to be the consequent encroachment of this wick on the 15 minute. There's just a lot of nice confluences right there with a nice narrative that we're going to protect this low. And so I was confident enough to go in on a smaller time frame after evaluating all of that. And these are all things I'm doing within a matter of like a minute, 30 seconds or two. I'm quickly going in. I'm using my fib just to measure the wick. I'm using my fib. I'm looking at the new week opening gap, and this is what I saw. Right, we tapped that with a nice reaction off, and I didn't get in down here. I got in. Where did I get in? I got in on this candle right here. Shoot, this candle. I got in like right there at 42.0250. And we're going to go into why. Why did I get in there? Well, one, because I saw the reaction here and I wanted to wait for confirmation. Because like I said, if I'm going on a smaller time frame and we're in seek and destroy, I didn't want to get chopped around. I wanted to see confirmation first. So you have on the 1 minute, right? If you want, I can pull up a screenshot of what I posted on Twitter. Get this fair value gap here. Let's just mark that FEG. And you also are down in a discount. Let's go ahead and do optimal trade entry. So boom, we're hitting OTE right here. And if you want to refine it even more, what is also down here? This is almost like the box setup. If you go on a 5-minute, this is kind of why I like this setup. You have a consolidation in this range, and then you have a deviation from the range up here, and you see it come back down on seek and destroy days. Well, what's also going to happen? Right here, you come down below this this range and return back in, right? So what happens when we come back down below, like in this area, right? It doesn't have to be the exact low, but in general, these are like, this is the level, right? When we come back down and hit that level again, which also happens to be new week opening gap, right here, when we hit this level, this is like the box setup. If you know what the box setup is, you look for, if I zoom out, you can probably see it easier. You have a nice range, and when price comes back below the range or deviates from this range and then immediately turns back in, you want to see a BPR form, a balanced price range form. And that's what we have right here. So I can actually change this to a BPR. And I can refine it even more. So instead of it being right here, I can refine it right here. This balanced price range that runs through these candles. Because price has only been delivered once on the sell side, once on the buy side. And so we have overlapping fair value gaps, and look at the body of the candle, respect that right there. Respects the top of that BPR. So, and if you want to get even more technical, like this is all stuff that, boom, almost hits, it doesn't even hit the consequent encroachment of the BPR, it stays above it, right? And that's really bullish. And we're in OTE, and we have new week opening gap, and we're in, what's it called? Seek and destroy, where you know if we're deviating from this range, like box setup, we're probably going to go back into the equilibrium at least. Targeting external should not be your main focus, even though, because we've already taken it 3 times, right? If you zoom out. Where is it? Right, 1. You have it taken here again, and then here again, right? Same with here. You have it taken here, here. Probably not going to take it again a 3rd time, especially with all these confluences down here. So that's why I waited for confirmation. Take these boxes off. Got in right before this candle took off right here. So how did I execute it? Let's go. Obviously, I was targeting these clean highs. So first thing I see is this. Yes, I was in this until we barely broke above that, which is really annoying. Not sell side. Big clean highs. I'm just going to draw it like I had it. Clean highs that I was watching. Came down into OTE. The BPR. New week opening gap. Box setup. Plus bouncing off the daily fair value gap down here. Immediately return back in the range. So let me get rid of this box setup. So you could have entered right there. A lot of ways to refine your trade. But I waited for confirmation, like I said. So we had a nice shift here. Market structure shift. So there's your light bulb going off saying, hey, you're a 1-minute trader. Or maybe you wanted to wait for this. This being your shift. But why did I use that first? Smaller swing high. I'll get to that. I mean, you could have entered right here. And there's your entry right there with your stop either below this candle's low or this candle's low. Actually, I probably would have put my stop here because what is this? This is a breakaway gap. And price is not going to do what? It's not going to want to it's not going to want to reverse right after you have this retracement and then expansion, right? It's not going to expand and immediately reverse, right? It's going to want to expand higher into opposing liquidity. So that's how you spot a breakaway gap. So I probably would have put my stop here if I'd entered right here. That way you're at least protected by whatever this is. What is this? Your breaker. bullish breaker. So you're protected by this breaker as well if you put your stop basically right here, because you have this swing low taken out. Sorry, yeah, swing low taken out. And then you have displacement higher above it. So low, high, lower low, and then it expands higher through that high. And now this is your bullish breaker. So anyways, we can draw so many PDRAs, and I can go through so many of them, but you don't need all of them to be successful, right? I entered earlier than that. And I entered right when price broke, right when I saw break and close above this candle right here, these candles. This is also a little mini bearish break or bullish breaker. You have a high, you have a low, a high, lower low, and then it expands higher or breaks higher. With all that narrative in this OTE area, you know, where I see the reaction here off of it. So all those confluence points are already in my head, and I see we had a shift in market structure. So right when price closed above that, I waited for the close, which you don't have to, but I did. I waited for the close, and right when this candle opened, boom, I'm buying. I bought 4. And then I just held, and I literally held until we broke one tick above here. Yes, I could have taken partials. I took half off. I took 2 above here. Actually, let me see if I can. Let's see if I can. Yeah. Actually, I'll just show you my. Actually, I gotta show my. Hold on. I gotta log into my thing. If you want to see the executions, I gotta log in. So let me just mute this real quick. Gotta do my login info. No hacking. All right. Okay. Zoom in. There we go. Where's my? I'm not the most fluent in OBS, but anyways, here is where I got in. Right. Bought 4 right when this candle opened at 42.0250. That's the opening price. If you look top left. So right when this candle closed, I bought 4. Stop below here. So entry, stop 1 tick below this low, targeting 1 tick above the high. So that's 9.5 handles. Yeah, I basically sold. I took a screenshot and it immediately reversed back down, so I couldn't get the best fill. I didn't have a limit. I was trying to finesse with the buttons up here. But yeah, anyway, sold on that candle when it broke the high. So, boom. That's basically it. And then the remaining, I got stopped out on here on this candle. I just put my stop at break even. And so once it came back down, I was trying to hold for the highs. Oh shoot, what did I just do? Take this off. This thing's got on my nerves because when you zoom out, they're all over the place. I was trying to hold for these highs up here, but we ended up not getting up there, and I just got stopped out right here on this move before we moved higher and took out all these equal highs. So anyways, that was my trade. If anyone has any questions on that, let me scroll through the questions real quick, or just scroll through the chat, make sure. Yeah, trade after 1 p.m. I'm usually trying to be done by 1 p.m. or by lunch trading. Esteban, most of my trades are on the 5. This is what I look at all day. So most of my trades are on the 5 minute. And then I'll narrow in on, like, my entries are all in 5 minute or higher. But today I went on the 1 minute, which I haven't done in so long. But I just decided, what the hell, like, I liked the narrative off the gap. Along with the seek and destroy box setup type style entry. I liked how we respect that. Deviation from the range. Came back down, hit it, then went higher. So those are all things I was looking at, and it was below midnight open. I kind of had that like in the area, and it was just nice. But yeah, I'm mostly on, I mean, I'll execute on anything up to it in 1 hour. 1 hour, 15-minute, 5-minute, and whatever time frame I enter on, that's the time frame I'm managing the trade on. I don't go on the 1 minute trying to trail my stop. No, I'm using the 5-minute to trail my stop. Okay. Yeah, QHDR. The box setup is literally what the setup you're talking about, where it's consolidation, aggressive move up or out of the range, like we had here. Aggressive move out of this range right here, up, and then back into it. And you also had an aggressive move out of it down here and back into it. And so you can see when we came back and hit the level, like I keep pointing out, right here, we now return back into the range and you get a nice sweep of this high up here. Yeah, well, his model used to be scalping like the 15-second, 30-second, but I remember him telling me, or telling his viewers at least, I don't know if he told me personally, but I just seen him mention that he basically scalps, he basically is on a higher time frame now. He's been trying not to be a crackhead. All right, so we're about an hour in. Let's try and get some questions. I'm gonna try and answer everyone's, but like I said, I want to cap this at like an hour 30. So let's go till 9:30. So really, if you have a question that I haven't answered already, go ahead and put it in the chat. I'll be reading them. Your entry is a breakaway gap / FVG. Let's go back to this segment. Yeah, I entered like right when this candle closed, this 1 minute candle, right? I just entered when this 1 minute candle, when this candle closed, the highlighted one, and this new one opened right here. I entered right when this candle closed. I entered right here on this opening because I wanted to see it close above these highs because this is a little breaker. How often do you look at dollar for risk on and off? Here's my S&T chart. It's literally just YM, NQ, ES, and then I have the dollar on the right. I can just, on a bigger window, I can kind of see what's going on. I mean, the dollar's been pretty like choppy too this whole time. So, and I mean, the indices have been going up with the dollar. NQ's been going up, dollar's been going up. So I really haven't been looking at it that much, to be honest with you. I mean, indices are up, dollar's up, not really making much sense. Just goes to show what kind of conditions we are in. But I mean, I look at that. I don't compare every little price swing, honestly. I kind of stopped doing that because we've been so choppy. But if it ever cleans up, like if we ever go back on easy mode, like 2020 market, which I'd actually trade, but it'd be nice to go back and experience what that was like. Maybe then I'll start looking at the dollar a lot more. But it never really was a part of my system when I started. I learned a lot just by watching like Ben DXY on Twitter, and like I said, I kind of take nuggets from everybody and kind of piece it together myself into my own little system and model that I've been trading. So that's kind of how I did the search and destroy, seek and destroy stuff. I got the projections that I use a lot from AM. That's how I got the box indicator from T-Trades. I got a bunch of little stuff. I got some more things in the arsenal too that I haven't really been using right now, but I might bring it out. Why fix it if it's not broken, you know? What I've been using now has been good. Let's see. But yeah, this is what my S&T chart looks like. Just on my second monitor. I only have 2 monitors. You don't really need anything else. This is how I have it set up, that I can compare the indices to top one another, and then the dollar to the right. And then I also can just double click and I have NQ if I want to compare the highs. Change it to the high. If I want to compare the lows, I can compare the lows. But I mean, it's seek and destroy, it doesn't really matter. SMT everywhere. But yeah, I look at SMT like when it's a nice trending day. When it's just chop like this, I mean, you're gonna have SMT all over the place, and if you're just basing your trades off that, you can get lost pretty easy. It's just another confluence point. Someone's asking, is the price delivery can be for each day? Consolidation, expansion, retracement, reversal. Price is fractal, so it can be consolidating on a weekly time frame, but it can be expanding on a 5-minute time frame, right? Same with the daily profile. It can be consolidating on a daily profile, but it can be expanding and reversing, right, on a 1 minute. Oh, shoot. It can be consolidating at one moment and then expanding down for these stops and then reverse back into the range and then consolidate again. So it's all about, this is kind of nice. It's all about what time frames you're looking at. What are you trying to trade off of? Because if you're trying to trade off a 1 minute, you can get lost easy. Whereas an expansion might just be a nice wick down and then it, returns back into the range. So I'm getting through these questions. You just gotta remember, price is fractal. What might be consolidation on one time frame could be, what might be a retracement on one time frame. Wait, let me see if I can find an example. Like this is all consolidation on the 1 hour, but if you go over there on, like, see how my cursor up here lines up over here? But this is all consolidation on the 1 hour. But inside the consolidation, we have nice swings on the 5 minute. So it's like, you can trade in consolidation on even though the 1 hour is consolidating, you can still get nice trades on the 5 minute, That's what the fractality of price means. Price is fractal. Price is price. I'm able to remain calm when taking a trade. I find myself taking the trade and cutting it to short to allow price to make its move. That was how I struggled with that a lot in the beginning, mainly because I was on the 1 minute. I try and have these super tight stops. I try and get in, like, let's do an example. I try and get in on this volume imbalance or something. And, like, put my stop, like this obviously would have worked out. Like, put my stop below these equal lows, or like, I would just get so caught up on the 1 minute and I'd trail my stop super tight and I would just get wicked out. And then price would run in the direction I thought it would, or I would just be dead wrong because I was so focused on watching the 1 minute. Like, my charts used to look like this: 1 minute, 5 minute, daily. Like, this used to be my chart. And this might be actually like a 1 hour sometimes, but I'd be literally like 1 minute, I go to the 5 minute, I go to the 15 minute. And it's just like, why are you looking at the daily if you're trading the 1 minute? Like, it just didn't make sense. Like, nowadays, if I want to look at the daily, I'll just literally just hit 1D and I'll just peek at it real quick, see what's going on, make sure, I have my levels marked for like highs and lows, and I'll just switch right back. But I'm always looking at these higher time frames. But yeah, having your stop super tight, you'll find you get stopped out a lot more than if you did giving your trade room to breathe. And like on the 1 minute, a 5-handle stop loss might look huge on the 1 minute, but on the 5 minute, it just looks like where it should be. It just looks normal. Like, that's where it should be. And that's why I stopped trading the 1 minute. Everyone wants to be ICT. I tweeted this. I was like, everyone wants to be ICT on the 1 minute. But like, just be you, right? Just do what works for you. He uses the 1 minute because there's a plethora of setups on there and he can show off the precision. That doesn't mean you have to. Right? If you can't be profitable in a higher time frame where price moves a lot slower and you're going to take a little bit less trades, if you can't be profitable on a higher time frame, why do you think you can be profitable on a super low time frame like a 1 minute or 30 second, even a 2 or 3 minute? Why do you think you can be profitable on a smaller time frame where there's a lot more fake outs, and price moves a lot faster? You only get a minute to think if you want to get in or not on this candle. You only get a minute. Whereas on the 5 minute, I get 5 minutes to sit here and watch what this candle's doing to see if I want to get in. Like if you can't be profitable on a higher time frame, why are you trying to trade on a lower time frame? Prove you can do it first on a higher time frame, like the 5-minute or the 15-minute or even the hourly if you're going to be day trading. And once you can do that, then bump it down. I just don't get it. And I also see people say, like I saw that I was talking to somebody and they were like, yeah, I don't want to trade demo, like, or I took it on demo though, like it doesn't matter. Or they were just basically trying to play off like the demo aspect. I was like, dude, I treat my demo account just like my regular account. It's the same balance in there, same risk management, right? I'm only taking A+ in the demo account, because if you don't treat a demo like a regular account and you dismiss it as demo, then you're just you're basically just not practicing discipline, right? Because if you don't have the discipline to treat it like a regular account, then what makes you think you're going to treat a regular account with real money on the line, with real emotions in the market, when the money actually is real and it matters? What makes you think you can do it when you have added pressure? If you can't do it on a demo without, consistently, where there's no real emotions, and deep down we all know demo, it's not real. Oh, I can take the trade. Oh, it's like a B+ trade. It's not an A+. I'll take it. Deep down, we all know it's demo, right? Whether you want to, as much as you want to pretend I'm treating it. No, if you can't treat a demo like a real account, then you're not going to be able to handle a real account when there's actually real money on the line, when your emotions are flaring. So that's just my 2 cents. But yeah, consistency on demo and higher time frames first before you really want to get on the 1 minute and trade. But how am I able to remain calm? Not having a super tight stop loss, by zooming out. Zooming out forces you to be more patient for setups. It forces you to be in trades longer, because if you're trading on a higher time frame, you're looking for bigger moves, right? So the more you trade on a higher time frame, the more patient you're going to become. Like I got so used to being on a high time frame, like when I was in this 1 minute move right here, and price just kept hitting the top like 3 different times. It didn't hit my target for 24 minutes, and it was just chopping around right below it, right? Didn't bother me, because I knew if we're consolidating on this level, I love to see that, because it means that they're letting the orders accumulate up here. They're letting traders get in and short right here. They say, oh, look, it's resistance, and they're going to want to short. And I know when it does that, when it consolidates below without hitting it, or maybe not even like to the tick, it could be just like down here, over here in the same like area, they're going to run it through at some point. They're going to run it through. And so you can see they actually did that, right? And even if obviously, yeah, we hit my target here, but if you're like playing off the support and resistance idea that retail uses, that I used to use, that everyone else used to use, right? You have this resistance right here, this big old, a lot of orders sitting right here. Oh, and we're gonna run it down, and everyone who shorted here, oh my God, we're right, guys, we were right. This was resistance, comes down, immediate returns back into the range. Now those people are either underwater because their options, the premium or whatever you want to call it. I haven't traded options in so long. The premium is now against them. They didn't sell, they didn't take profits down here because they viewed this as a breakout when really we're just grabbing liquidity and going back into the range. Seek and destroy. And then we eventually, like I said, they run it through, right? So when we consolidate like that and they build these highs in, you just know they're going to run it through. So but being on a higher time frame right here and trading on it for so long now, like this didn't bother me, right? Because I was already in profit, right? My stop was back at break even down here below my night open. So yeah, and we were above 8:30 open as well right here. And I could have easily just exited, but I stick to my rules. What was my plan? I'm taking profits above this high. Not at the high, above the high. One tick above the high. And so I didn't sell until we hit above that high. And yeah, like you saw my execution, I sold down here actually because I was trying to time it with the buttons. And I wanted to get a screenshot for you guys on Twitter. But yeah. Let's see. That's how I'm able to like remain calm. And it's just like over time doing it for so long, just not having like any emotional ties to it, that only comes from pushing the button over and over again, and being desensitized to just knowing what to expect. Like I've watched the candles for so long now, every single day for over a year now, trading ICT. I started trading ICT like a little over a year ago, so a month ago, like, let's see, April last year. And ever since I found it and started trading it, I dropped everything, and here I am now, live streaming for you guys. So it just goes to show, like, if you put the work in, you can do it. But obviously I do this full time, so I can sit here and get the chart time, unlike some people who might have a 9-to-5 or whatever. They have kids, wife, family. I'm 25 years old, so I don't have those responsibilities, so I can take the risk, and I have a lot more time to do this. So all right, let me see. Go through some more questions. Do I trade by myself mainly? Yeah, I live alone. I used to live in a apartment with a roommate, but I moved out beginning of May. We said it appears digits asking. I hope I didn't skip questions. Let me see. Oh, how did I get my larger screen on the right? This plus button right here. See how I'm comparing NQ and M. See how my layout's still just a dual chart, but over here you can compare them and stack them on top of each other, just like how I have it right here. I'm actually comparing NQ just with the line chart below it, and I can just click. I can move it up and down. I can put it on top if I want, but toggle it on this button here, or just double click and it comes up and down. But yeah, plus button. Yeah, I don't have a Discord. Sorry, I'm trying to get back up. I think I skipped questions. Remain calm. Do I only focus on trading ES? Yeah, I only trade ES. Sometimes, like here's my watch list. Like ES and Q, the Dow. I haven't really traded gold ever. Natural gas I was looking at for like a long-term thing. And I have traded oil before, but I really just try and focus on ES. And then I use NQ and the Dow for SMT only. Maybe I'll trade NQ later on. I don't know. I kind of just look at these and then trade ES. Yeah, I trade by myself. I'm not funded with anybody or anything. I don't have like a group. I used to be in like a Discord learning ICT concepts, and then I feel like learning like the basics like together with people and like is good, but you get to a point where like you just need to focus on your own. Whether like there's nothing wrong. Like I'm in some like Discords. Like I'm in ICT concepts kits Discord. I don't post in there. I had like a bad habit of like opening up Discord and like trying to get confirmation bias on my trade sometimes, or just wanting to like prove to others I could trade, and it was holding me back. And so I had to basically remove myself from all Discords for a while. Now I've found my groove. I know what I'm looking for now. It's not a problem anymore, but there's like a certain point I feel like, at least for me, that I had to step away from like chat rooms and all that. Like I could return to them now if I wanted to. It's not a problem anymore, because like it was literally addicting. Like I would go on Discord, and like during the times where I should be looking at the market, I'd just be looking in the chat, and I would miss stuff, and I wouldn't be fully focused on the candles. And so when you're taking it that serious and you're trying to do ICT full time, or not even full time, but just be serious about it, you get to a point where like, okay, you need to eliminate distractions. And now I'll go in a Discord. Like I have servers, like, I'm not active in any servers, but I might just peek in one like when, after the market is closed. But if the market's open, like Discord's not open for me. I have all the notifications turned off, everything. So if anyone DMs me anything, I don't see it until I open it up. But like, I'm not like hating on like being in a trade room or anything. But for me, I think it might be fun to like learn the basics, And like some of the people were like, oh, well, like trading's lonely. Like I want to trade. Like it's nice being with people. Well, then trading's probably not for you, because you need to be content with being alone in this journey by yourself. And, you know, if you're looking for to have a group, you know, if you're here for fun, then you're probably here for the wrong reasons, right? Yeah, like this is serious fun, okay? I mean, yeah, you might be on Twitter. Like Twitter's the only thing I'm active on now for the most part, and YouTube. And I've made a lot of like cool friends on Twitter. But we all lock in like on Twitter. Like it's easy to control Twitter. It's easy to control who I interact with on Twitter. But when you're on a Discord and you have it open, it's just constantly pinging you, and it's just too much when you're trying to take it serious and really grind through the content. So the smaller the group, the better. If you're going to be in one. So, and you want to make sure the people that are if you're in a group, the people who are in there are serious about it as well. Like if people are just in there casually, like either trying to just like talk shit to each other, make memes about each other, or, you know, always questioning why you're doing something, right? Like it's just not where you want to be. It's like you shouldn't be posting in a Discord like for confirmation bias like I wasn't early on. How long have you been trading ES using ICT, paper, and live? Yeah, like I'll still trade paper like on a seek and destroy day. I'll trade paper on, like if I'm gonna take one. Just I've been trading a lot of paper like recently, like back in the beginning, because I was like, damn, this sucks. But then we started getting some nice range here, and I pushed the button live sometimes, and I've been kind of doing that ever since. But just up in here, and like it was just awful. But yeah, until like if you're I don't know if I answered that. If you're wondering how long you should trade paper, it's different for everybody. But like I said, if you can't do it on demo, what makes you think you can do it with live money? If you can't do it on a 5-minute chart or higher, what makes you think you can do it on a 1 minute where it's way more stressful? You're just putting more pressure on yourself than there needs to be. So that's kind of why I moved away from the 1 minute. Yeah, Cario, I don't really look at the boxes for NQ. I just look at the boxes for ES. I look at the other indices though for SMT only. I'm not sitting here looking at the box indicator for NQ and the box indicator for YM, because it's just too much. Like you don't need to. That's what I get. People want to add so many different little concepts in their strategy. Mine's super simple. If you can't, like I said, you can't put it. What does he say? ICT. If you can't put it on the back of a business card, then it's probably too complex. It goes with the same like tweets I've put out in the past, where if you can't explain your strategy to someone, in like, you know, a concise way, then it's probably too complex to execute on efficiently. So that's just my opinion, but you don't need to have new week opening gap in your strategy. Like I have it here, but because it's the hot new thing now, I have it here, but it's mainly to see, you know, how can I incorporate it into my current strategy, and if I can, that's great. But like I said, like I'll have this. I'm not staring at this all the time. I might open it up maybe 3 times throughout the whole trading session just to see where we are in relation to it. But you know, I don't have it marked on my chart while I'm trading. You don't need all these little things to be profitable. You just need a few concepts that work in tandem together, like power of 3. Using the 8:30 and the midnight open price. What else? Box indicator, right? Daily highs and lows. That's basically it. Like this is all like y'all see if you go through my live streams, you see like what my morning routine is. I literally did it for you today too. Go here, come over here, mark out the highs and lows, and I look at the news, and I like that's literally all I do. I'm not sitting here like counting candles. I'm not doing any of that stuff. I'm not hating on counting candles either. I'm just saying it's not something I do. You know, and I probably could count candles. I've never tried it, but I don't need to. I'm making money not doing it. So why, like, I don't have to add it in my thing, right? It's just another tool. And so if I'm making money doing this, what I'm currently doing, why do I need to change it up and add something else? And you might be saying, oh, you could be more profitable. Well, yes, that's true. Or I could also mess something up, right? It's a double-edged sword. And at some point, it's just your brain goes into analysis paralysis, and it's just too much to handle. So you have to keep it simple. You have to, and especially if we're in the 1 minute, like you have to keep it. You have to be able to think quick. Am I going to get in? I have a minute to decide. Am I going to get in? That's why I like the higher time frames, because if you are trying something new or really trying to refine something, you have a nice time to let the setups form. The candles close in 5 minutes each. Like it's just better. You catch bigger moves. Do I live trade? If you mean by like live stream, like trading, live executions, no, not at the moment. I thought about doing it just like once a week for fun or something. But if I did, I don't think I'd have the chat open like ICT does, because it'd just be a distraction. People be like, oh, what do you think about this? What do you think about this fair value gap? Why'd you get in there? I was long. You don't know what you're doing. And it's just like, I don't need all that in my ear or on my screens while I'm trying to make money, trying to feed myself. Yes, this will be recorded, and it's going to be on my page after. All right, it's 9:36. Let me get through the rest of these. Thanks for stopping by, Herlito. If your setup appears during a news event, how do you approach the trade? Depends on the news event. Digits. It depends on the news event. Where is it? Like CPI? No. FOMC? No. I always wait 30 minutes after those events. Because I've gotten burned on CPI. When I first started, I was trading on the 1 minute CPI, and I forgot about the news because I was new. Right? I didn't have a system. I didn't have the news, or I looked at the news, but I forgot about it. I was in like a short, and my stop was like, it would have been a $60 loss. $60 loss turned into a $600 loss, and I was so pissed. And I did the right thing by stepping away after that. I was like, I just fucked myself, and I'm gonna revenge trade if I ever sit back down today. So I just walked away. But I learned the hard way. I forgot about CPI news event, and I ended up like turning a $60 loss because my stop loss, literally, like I said, the news event will literally ran through my stop, like gap through it, and just started going like spooling, like higher. And my $60 loss, it wouldn't execute. I couldn't even flatten the trade to get out. I just was sitting there watching myself, like my account get drained. I was like, oh my God, this thing's going to the moon. And it did. And I got stopped out eventually for $600 instead of 60. So I don't trade CPI after that. I don't trade FOMC, obviously. Anytime Fed Chair Powell is like speaking, I'm not really trading that either. But like, what else? Like, what's something that's like not that crazy, even though it's a red folder? Like tomorrow. Like if I'm in a setup, right? If I'm in a setup already, like let's say I bought like, let's say I'm like short right here. I don't even know. This is just this scenario. Let's say I got short like on this order block. And like this candle right here comes down, and then news hits on this candle, and I'm short up here. And then the news comes out on 11:10, or obviously this is not a real life scenario. This is just example, but I'll say I'm short up here, and my stop was like above this high or above this high, whatever. And the news came out like somewhere right here, and I'm already this far away from my entry. I'll just put my stop at break even if news comes out and it hits it. Obviously, the major news events like CPI, FOMC, like those crazy news events where your stop, the volatility is so crazy that it can run through your stop, and gap through it, and you be in a big loss, then I will, just collapse the trade before the event. But if it were like down here and I'm seeing my bias play out, right, like sell side, buy side of the curve, and I'm seeing everything be respected, if you think about it, news is really just a tool to inject volatility in the market, and they're going to take price where they want it to go anyways, right? It's just going to get there faster. So that's kind of how I view certain news events. It just kind of depends on the news event, though, on which one I choose to hold. It also depends on the trade. like where I got in, where price is currently at. Hope that helps. It's not like a one. It's just like how ICT concepts is fractal, right? There's really no like one size like fits all rule, one standard rule for me. It basically depends on where, if I'm in a trade, if I'm not, if how good the setup is, risk reward wise, what news event it is, right? So let's see. Yeah, I think you should start if you're to know nothing or you're like brand new. I think you should start. Let's see here. Got 100 viewers. Okay. If you're new, I think you should start like 5 minute, like literally what I have right here, hourly, 15-minute, 5 minute. And you can just like, if you want to change the hourly to the daily, and just have it in the top left. That's fine. Or maybe a 4 hour. That's what's nice about having this. I can just kind of put the higher time frames in the smaller windows. Zoom in if I want. Because this takes an hour for this candle to close. Whereas over here, I have more space to look at, the picture in detail, where it moves a little bit more faster. Yeah, I would recommend hourly 15.5. How to become a full-time trader? You gotta make more money than what your bills are for the month by trading, and then you are a full-time trader. Or you have a side business away from trading, or you know, like I call myself a full-time trader. Like I pay my bills with my trades, right? But also, let's say you have a business outside of trading, like it's not trading related at all. It could be like you own a construction business, or you have a car detail business, whatever it is, right? Real estate business. Like, yeah, all that stuff like isn't really, like maybe you have employees or whatever, and you have a lot of time on your hands now because your business is running, and all you're doing is really managing it now and scaling it. Depending on how time consuming that is, you might be able to, just trade the New York Open like I do, and you just trade that, and now you're technically, you can call yourself a full-time trader because you pretty much just trade, full-time alongside your business. Or, it's just like a loose term. You can make no money and still be a full-time trader. You should be an unprofitable full-time trader. But yeah, for a day trader, which time frame do you suggest to stick on? It depends on what you're comfortable with, but like I'm a day trader and that's what I use. Maybe your model is counting candles on the 1 minute and you're looking for power 3 on a 1 hour candle, right? That could be your trade model. That's not my trade model, but I know people who do that. So, and they're day traders. So it's just like it's whatever your model allows for. That's nice, the MT4 idea. Yeah, I always get by, unless you're like already in a trade and you're like been holding all day and your price is already really far away from yours. And obviously if price is really far away from your entry on a news event, you've already probably taken partials. So you already locked in some money, right? So if you already locked in profit and funded the trade, moved your stop to break even, then you probably could afford to hold the trade through the news event, right? Like I said, it just depends on the trade. Depends on the news event. Depends on where price is in relation to it. It depends on if you've locked in profit or not already. Can you explain trading with consolidation or pointing in the right direction? Yeah, you just want to be a scalper. Like if you're just going to be, if price is just up and down, you're going to be taking, trades at internal liquidity. You're not going to be aiming for external, right? Because look, we're just chopping up and down. So you would just be taking trade partials at like internal liquidity, such as like fair value gaps, internal highs up here, right? So be internal liquidity pool. If you're talking about this range right here, anything inside here is internal liquidity until we break out externally. So that's how you trade a consolidation market in simple terms. Yeah, if I just get one nice trade, like I'm done for the day. Get my piece of the pie and exit. Unless it's like a really good day and I can pyramid in, or I don't know, it just kind of depends on the day. and how much, and like what percentage I made. But usually I'm just taking one trade a day, and that's it. Am I comfortable trading 8 minis versus like 2 micros? I think you got it mixed up. Wait. 8 minis is more than 2 micros. You mean two minis versus 8 micros? Yeah, I mean, it's all just relative. Like 1% of your account is 1%. Doesn't matter what the instrument is. It could be a micro, it could be an e-mini. 1% of your account, if you're risking 1%, is 1%. The benefit of trading more contracts is you can scale more, what do you call it? Efficiently, more precisely. If you want to take off like 60% and you only have 3 contracts, well then you can't. You really can only take off 2/3. It's just easier to scale when you have more contracts. We thought about signal service. I mean, it's all those. I mean, like those. Everyone thinks about that when they first start and they like, get good or whatever you want to call it. But it's just not what I want to do. I don't like giving people spoon feeding. Look at that. I don't like spoon feeding people. Like I literally used to give call outs when I traded, before I traded ICT, I used to give signals on for free in this Discord called 5 Rivers. And if you know like Ripster47 on Twitter, who trades like his EMA clouds, that's what I used to trade in the past with options before I found ICT. I used to give signals on there, and it was just like, after a while, it just got so annoying. And I was just like, people always just get hundreds of DMs, and people like love you when you win and they hate you when you lose, and it's like at the end of the day it's you pushing the button, dude. Like, why are you getting mad at me? And people, if you put a signal out, like people will literally full port their whole portfolio into an option that expires in 24 hours, and it's like, bro, what the fuck are you doing? Like, why would you full port into that? And like, it just got too much, and I just like, people were literally blowing up accounts because A, they're not trading correctly with risk management, or B, I call out a loser and someone put their whole account into it. it's just stupid. But yeah, I don't want to do a signal service like that. It just defeats the purpose of ICT in my eyes, because the whole point is to be self-sufficient away from Michael. Like, I feel like if you run a signal service, it's almost like you're defeating the whole point of it is like, now, like what's the point of learning? Like, you're really just there to, like, for me, what I would like to see, the whole reason I post on Twitter, I like to see people progress. And if you're just feeding off someone's signals, you're not really progressing. You're just borrowing their conviction in their ability, right? You're not building your own. So that's my thoughts on that. Study strategy, 2022 mentorship every night before bed for like months. And when I saw something in the chart in the videos he would point out, I'm like, no fucking way. And I run to the chart real quick and I go back and I look and I'm like, holy shit, like that actually happens. And then I would go back and watch another video and take like a couple notes, and I'm like, no way. And I go fucking run over to the chart again, and there it is, like a fair value gap or whatever order block, like it would be hitting to the tick, and I'm like, what the fuck? Like, I've been trading on fucking clouds, like losing money, like gambling basically, and like here's this guy getting in at the to the penny or to the tick on these moves. I'm like, what the fuck am I doing? And I just felt so stupid after watching it, and I was like, I gotta learn how to do this. So yeah, video every night before bed, because you remember stuff a lot easier when you go to bed. It'll be in your mind when you go to sleep. And that I found him, I dropped everything. Yeah, I already answered that question. Day trading, it depends on your model and your style, but this is what I use: 5-minute, hourly, 15-minute. It's hard to catch day trade moves on anything higher than an hourly. You could use higher time frame levels, right? But executing on like a 4-hour chart, you're really not going to get a lot of day trades on that. Do I take turtle soup entries? Yeah, I do. Off breakers. If I can anticipate the breaker before it forms, I'll take the turtle soup. If you missed the indicators, just go to the beginning of the video. They're somewhere in the beginning. I'll show settings and everything, and I posted them in the chat, the links. How to become funded? You got to pass a funded account challenge. I have my phone on airplane mode. Yeah, no distractions. Thank you for following on Twitter, Professor X. I'm getting to the end of these questions now. Let's see. Yeah, lives are fun when you're like, going, bouncing ideas off each other. But in the end, like, you might be wanting to get in. This is another thing for the trading like group things. Like while the market is live, while you're trading live, and that's why like if you're gonna watch ICT live stream, you need to not be trading. You need to be focusing on the candles and what he's trying to teach. Because if you're trading while he's teaching, you're not going to be listening to the lesson. You're just going to be worried about the money that you have at risk, right? And focusing on that versus what he's trying to tell you. So it goes the same thing. If you're in a chat room and you're just bouncing ideas off each other live while the market is happening, one person their whole strategy might be way different than me. Like T-Trades might be going short. And he's on a 15, 30-second chart. And I'm trading off the 15-minute. And I'm looking to go long. And I'm like, wait, why are you going short? And then it's just like making me contradict myself. And it's just like, everyone has their own strategy. It's like hot potato with these contracts, Like someone tweeted today, hey, or the other day when I got out of a short, he's like, yeah, I went long right where you got out. It's like, that's perfect. That's what ICT is all about. You're getting in. I'm dropping off the contracts I sold short up here to you down here at midnight open, and you're riding it long up here above this high. Like that's hot potato. We are literally passing these contracts like basketball players, like it's a hot potato between each other. I'm short, I'm selling to you. You're going long, you're selling back to me. Like that's good. That's fun, right? But if you're in a chat room and you're like trying to like understand someone else's strategy and live in the market while you're thinking about going long and they're going short, it's just too much. And that's if you have one person in there. Imagine if you have 10 people and they're doing that. It's just too much. I've done it. It's too much for me. Okay. And then you combine that with trading on a 1-minute chart where it moves so much, so many fake outs. Like you see how all this stuff compounds on top of each other, and now your phone's ringing and your mom or your wife won't shut up because you're trading and she doesn't like you when you trade. You see what I'm talking about? Or your roommate just got a new puppy and it's fucking barking, and there's all these things that compound to distract you. It's just why even bother? What are you getting out of it? Are you trying to study while the market is moving? No, you're not supposed to be studying while you're trading, right? Yes, you're learning through experience, but if you're trying to like learn textbook style stuff while watching price live, like that's not it. You're not gonna be learning. You're missing the point. You shouldn't be trading while watching the live stream. Does that make sense? I hope I don't hurt any feelings, but that's just my take. Because I've been there, I've done that, and that's how it affected me. The less distractions, the better. Like I barely go on Twitter anymore during the day until I have something to post. I'm not scrolling the home feed. I might have ICT's tweets pulled up if he's going to be talking that day. But if I am going to be watching his tweets like actively, I'm not trading that day because it's basically just watching his live stream. He's extend this 1-minute FEG to the right of your chart. And it's just like, why? I'm not watching the 1 minute, bro. So why would I even look at your tweets? Counting candles, like I said, I don't count candles, so I can't really teach it. Sorry, Peter. I'm not gonna teach stuff I'm not familiar with or pretend like I know it. I focus on percent. Yeah, focus on percent. Money's relative percent is what we like to talk about, or R multiple or percent. Give an example of how to turtle soup an entry. Yeah, here. You'd enter right here when price breaks that high. That's a breaker. So if price ever wants to, your entry is safe. Well, I'm not gonna get into it, but yeah, that's a turtle soup right there. You would enter above that high, and then once it breaks down, breaker is now formed. So there's a bunch of different entry opportunities on a breaker if you know what you're looking for. I've explained it in the last video. I explain it on Twitter sometimes. Best time frames for silver bullet. Which silver bullet are you talking about? You talking about 2023 definition or the previous, old school definition that the people who've been around long enough know? This is why if you're on Twitter and you're saying, "Oh, I saw the silver bullet. That's a silver bullet trade," and you're talking about the one I took here, no. Silver bullet. Let me find. I got it. Visual. Here we go. I got the screenshot. This is silver bullet. This is what me and a bunch of other people have known for so long as a silver bullet, until he started talking about the macro or the time from 10 to 11. Right? This was the silver bullet. This is where he coined the term silver bullet right here previously, and now he's recoining it for some reason. I don't know why. I haven't watched the silver bullet video yet that he came out with. I've been meaning to, just so I kind of know. But the silver bullet has always been entering on the second leg of a accumulation or distribution if it's a sell model, market maker buy or sell model, right? Because it's the most explosive move. It's pretty obvious where price is seeking once you get to this point right here and it retraces down. You already hit a higher time frame point of interest. You have the reversal, you have the low risk buy, and now you have this second leg forming, and that's where you get in. It's always the most explosive move generally. There's some clean highs or lows if it's a sell model. You know where it's reaching, and it's always basically the most energetic move of the whole model. So this was always the silver bullet until he recoined it. I haven't watched the video yet, so don't grill me or say you're wrong, which I could be wrong, right? Maybe he did clarify that in the video. I haven't seen it yet, but from everything I've seen, he always preaches the silver bullet is a trade setup that happens between 10 and 11 o'clock, right? And for the longest time, until he started saying that, this was the silver bullet. You can go look at Market Maker Trader's Twitter page. He's got it all over his Twitter page. MMXM Trader. So if you ever say that's a silver bullet trade and you're just talking about the time in here, I'm just going to either not respond to you or just say, hey, I know what you're talking about, but I don't consider that the silver bullet. I'm going to go watch his video this week though and get caught up on his silver bullet video so I can be more informed. Saba Flava, is that you? Which ICT series made the most sense for you? Probably 2022 is where I started, and then core content month 1 through 4. Then I rewatched 2022 again for a second time, all 41 videos, taking notes. Then I watched the rest of the core content. I've seen every single video of ICTs except for the couple new ones he just posted this week or last week. I've seen pretty much every single video there is on his YouTube channel, which is actually insane to think about now. Would you be up for a one-on-one paid consult? I want to break through my roadblocks ICT. Not at the moment. That's the most common question I get on Twitter. Do you do one-on-ones? Do you do mentorships? Do you have a paid group? Do you have a Discord you're in? I can learn from you. I'm teaching on here for free right now. I'm teaching, I'm not teaching everything I know, but I'm teaching stuff that applied to today and stuff you can use tomorrow. It's free. Maybe in the future I might do one-on-one stuff, but I'm just letting you know the price is going to be high for that because I trade to not have a job, right? And so if someone wants some of my time, I trade for the time freedom, the location freedom, and the financial freedom. And so for me to give that up, to give away my time to someone else, the price is going to be high because you're basically asking me to it's basically going against the whole reason I got into trading in the first place. That makes sense? So if you want a piece of my time, it's going to cost you I don't have a number in my head right now. I've never done a one-on-one consultation before. I have done a small group, 3 people. That giveaway I did when I hit 10K followers, I did a small group giveaway with 3 people on Zoom, and we just talked for an hour and a half. And yeah, it was a lot of fun, actually. I might do that again. Maybe I hit 20K. Maybe I'll do a face reveal at 20K or tomorrow. Who knows? Hey, do you guys want to see a face reveal? Funded versus personal account. There's perks to each, but I think funded account should be a means to an end. You should be building a personal account alongside the money you make from the funded. Having multiple accounts is also a game changer. Like if you have an account for bills versus an account for like growth, like aggressive growth, maybe you have a funded account that's like really high, like a $500,000 funded account, and you have like $100,000 like personal account or something like that. Maybe you grow the personal account aggressively and you keep the funded account, since you have so much funding with them, more conservative, and you pay your bills with that, and you stop trading that when you have a certain percentage for the month, and then you start trading on the personal account. And there's so many ways to structure it. Or maybe you do the opposite. You grow aggressively on the funded account, so this is not your money, and you trade your personal account more conservatively and pay your bills with, you know, whichever account you see fit. There's so many different ways to do it, but having multiple accounts kind of seems like a good idea, honestly. I kind of want to look into funded accounts, but I just don't know which one to go with. They've been in my DMs asking to partner and stuff. I just can't bring myself to shill a funded account that I haven't used like some of these other people. So that's just not me. Like, y'all saw that thing I put it to Twitter today? Someone was literally paying me to retweet them. Like, how much does it cost for me? How much does it cost for your bullish thoughts on our project? And I was like, I didn't even respond. I was like, what? You want me to pay me just to retweet your shit and say it's good? I was about to say like 10K, but I was like, I was a joke, obviously. But no, I'll never do that. This could be a difference between funding your own account, funding restrictions, and trading news events. Oh, you mean like a difference like that, like the actual like rules for a funded account versus like just trading it for like broadly? That's a whole nother topic. Like restrictions and rules and drawdown limits and all that. That's a whole nother topic. Yeah, Timothy, the new silver bullet. There's going to be an FVG somewhere that gives a 5-handle run between 10 and 11. Yeah, that's what I thought it was. I haven't watched the video yet, though, so I can't really talk on it. My big account reveal. That's the worst, bro. No pocket watching. My money doesn't make you money, so why are you worried? No, I don't wake up enough early for London. We're gonna wrap this up here in a second, guys. This is 2 hours long. I always say I'm gonna cut it short, but it always ends up going over. Just because I want to give you guys the ability to ask questions. Yeah, I don't trade London. I wake up at like 7, East Coast, US. But yeah, let's wrap it up. It's 10 o'clock. Been doing it for 2 hours. I hope this is a profitable, knowledgeable stream covering Power 3. Sorry. Well, I guess we covered Power 3 a little bit. Covering mostly Seek and Destroy, which we've been having a lot of lately, so it only felt right to do the live stream. And I haven't live streamed in a while, so I felt like I needed to put something out for you guys. And I also haven't live streamed the new apartment yet. So maybe I'll do an apartment tour when all my furniture gets in on YouTube, because I kind of want to keep the YouTube fun. I don't want it to be all just technical stuff. I kind of want to do some lifestyle stuff, so maybe I'll do a face reveal soon. I thought about going to FX Summit and seeing like Jade Cap and some of them, but who knows? That's in Miami. I live in South Carolina, so it's not too far away. Oh, But anyways, if you guys want to see a face reveal, let me know. I might do one soon, or maybe I'll just wait till 100,000 followers. Nah, I really don't have a goal for the Twitter page. But anyways, it's just fun to see how much you can grow it and interact and make friends with people and help. That's really the only reason I'm on there. So if you guys like this, smash the like button. We got about 94 people in here, but if you like the videos, hit the like button, leave me a comment, letting me know, and thanks for coming. I hope you guys have a good night, and I'll see you tomorrow, hopefully, where we have some nice moves out of this consolidation here that we've been having for the past couple days now. So change the profile pic, it's creepy. Nah, keep it as OG, bro. Maybe I'll edit it a little bit, who knows. But yeah, you guys have a good night and be safe.